All right, let's get right into it. There's something really strange happening in the markets right now. You've got precious metals just taking off, while at the same time, crypto is kind of taking a nosedive. It's a total head-scratcher, and a lot of people are asking, what is going on here?
I mean, look at this. On one side, you have the old guard, gold and silver, the traditional safe havens, and they are on an absolute tear. But then you look at Bitcoin, the asset everyone was calling digital gold, and it's falling. This is, well, it's the complete opposite of what a lot of us thought would happen, especially in this kind of economy.
So yeah, that brings us to the million-dollar question. What is actually going on? Why are these two assets, which are supposed to be our shields against uncertainty, suddenly moving in opposite directions? Let's dig in and unpack this mystery.
Okay, to really get to the bottom of this, we've got to start with the mood of the market. There's this thing called the Crypto Fear and Greed Index. It's basically a vibe check for Bitcoin investors, and right now, the vibe is bad. The index is sitting at a 16, which is deep in the extreme fear zone. We're talking serious anxiety in the crypto world.
And that fear? It's not just a feeling, it's hitting people's portfolios. Hard. Just look at these numbers. Bitcoin has been dropping pretty steadily over the last couple of weeks, and it's really struggling to hold on around that $82,000 mark. I mean, this isn't just a little dip, this is a serious downturn.
So the big question is, what's causing all this pain in crypto? Well, here's where the plot thickens. The reason for this slump, it's not coming from inside the crypto house. Nope, the culprit is actually an unexpected player from the good old traditional stock market.
And we're not talking about some new crypto competitor or a scary government regulation. The trigger for all this was one of the biggest, most influential tech companies on the entire planet. Yep, you're seeing that right. That company was Microsoft. They put out an earnings report that really messed the mark, and boom, their stock just plummeted by 10%. Now, for a giant like Microsoft, a 10% drop isn't just a big deal. It sends massive shockwaves through the entire market.
And this is exactly how it played out, like a perfect set of dominoes. First, Microsoft misses its earnings. That immediately sours the mood for the entire AI and tech space. So the second domino falls. Tech stocks start to drop. And because Bitcoin has been trading so closely with tech stocks lately, what experts call high correlation, it was the next domino to fall. It just got dragged right down with them.
You know, this whole situation really puts a spotlight on a kind of identity crisis for Bitcoin. It was supposed to be our hedge, right? Our digital gold. But instead, it's acting just like another volatile tech stock, getting tossed around by the same waves. It's not playing the part of a safe haven at all.
Okay, so while all that drama is unfolding with tech and crypto, let's switch gears and talk about gold, because its story is the complete opposite. It's not just up, it's having a truly historic rally as investors make a run for what they see as real safety.
And the amount of money moving here is just mind-blowing. Over the past year, we've seen a staggering $16 trillion flow into gold, plus another $4.3 trillion into silver. Just let that sink in. This isn't just a trend, it's a massive shift of capital into these metals. Now, what's really fascinating is who's doing a lot of the buying. It's not just individual investors, it's central banks. Take Poland, for example. They've been on a buying spree, and they now hold 550 tons of gold. Get this, that's more than the entire European Central Bank holds.
Wow. And you know, this lines up perfectly with what big-time investors like Ray Dalio have been predicting for years. He basically said, look, governments are racking up insane amounts of debt, and that's going to make their currencies, fiat money, like the dollar or the euro, less trustworthy. And he predicted that because of this, central banks would have no choice but to run back to the safety of gold. And, well, it looks like he was spot on.
So, the big question for Bitcoin is, where does it go from here? If it's currently changed to the fate of tech stocks, what's it going to take for it to break free and finally become that digital gold everyone talks about?
Well, there are a few big things on the horizon that could change the game. For one, a new Fed chair who's actually pro-Bitcoin. Someone like Kevin Warsh would be huge. Then there's just getting clear, solid regulations in place, which would make big institutions feel a lot safer jumping in. And of course, the more those big players and even entire countries start adopting it, the more legitimate it becomes as a real alternative.
But at the end of the day, we also have to respect history. I mean, think about it. Gold has an 8,000-year track record. It's been trusted as a store of value since ancient civilizations. Bitcoin? It's basically a teenager, only about 15 years old. It's brilliant, it's innovative, but it's still got a long way to go to build that kind of deep, unshakable trust that gold has.
And all this leaves us with a really fascinating question to think about. In a world that's becoming more digital by the second, and with so much economic uncertainty swirling around us, which one are you betting on for the long haul? The 8,000-year-old champion or the 15-year-old digital challenger? Which asset will truly stand the test of time?